Infosys numbers are out, and that's why we've cut out of the special programming. 3,900 was the estimate, and 4,070 is what they have delivered. 3,957, that's essentially the PAT number that we're talking about, was the estimate, and 4,070 is what they have delivered. Generally nowadays the number that you get first is the consol one, so there is no problem of standalone and consolidated these days. In terms of revenue, 21,539, that's the number, and if I look at my rupee revenue estimates, it was 21,400, so 100 crore slightly higher number. Now when you look at 100 crores for a 21,400 crore base, it's not much. It's about 0.2%, 0.3%. So it's not much that we are looking at in terms of beat. But the good thing is the growth has been there. Okay, the first instance of FY20 guidance, that's the number that the street would focus on. 7.5% versus 9.5%. That's the number that they have given. In terms of guidance, I think we should put that number once again. The expectation was between 8 to 10. So maybe a little bit of disappointment, and 0.5%, mind you, for a company like Infosys means quite a bit. The dollar, okay, Trip Chowdhry is with us. Trip, what do you make of the first number of the revenue growth, revenue estimates for the next year, 7.5 to 9.5%?
I think the guidance is very strong, considering the fact there's going to be the global markets are heading for a recession, and in that environment, the guidance that Infosys has given is very, very strong, which tells that the services that Infosys provides are back in vogue.
Right. We also have the margin guidance, Trip, now, that is 21 to 23. That's again absolutely in line with estimates.
Remember two things.
Yeah.
That Infosys will be doing would be on-site. When they do more work on-site, that has the impact on margins. And that is because of the Trump's administration intent that more work needs to be done on-site. So I think this is perfectly fine.
We also have Sudip Bandopadyay now with us. Sudip, what is your first reaction? Profit is slightly higher. The revenue number is broadly in line. Okay, let's look at the dollar revenue number, 3060 versus estimates of $3055 million. So it's absolutely in line. What is your first reaction? I think margins are slightly lower, but I'll just calculate that for you.
Well, I think the first reaction is pretty much in line with expectations. The revenue guidance which they have given also is absolutely bang on. People were expecting them to slightly lower the revenue guidance for the next fiscal, which is exactly what they have done. They had a lot of these new large account wins, but there was a suspicion that probably there is a little bit of margin compression on these new accounts, and that's pretty much getting probably reflected in the margin guidance which they have given. But having said that, I think market generally agrees with the strategy of acquiring new accounts, even if there is little bit of compromise on margins.
Right. We also have the guidance number with us, Sudip, 7.5 to 9.5. How would you look at that? These are CC FY20 numbers.
Pretty much in line. I think the revenue guidance is pretty much in line. The only thing I'd like to point out here is that, post this guidance, we'll have to see how TCS results are and what kind of numbers they depict. But the gap between the margins between TCS and Infosys is kind of widening. And considering this widening gap, we have to start again questioning whether the value catch-up with Infosys did vis-a-vis TCS, whether that's justified, whether TCS really should be valued a bit more higher, whether this valuation gap should widen or not.
Right, Sanjeev Hota is also with us. Sanjeev, what's your first reaction? You've heard about all about the numbers.
Yeah, I don't have the guidance number, but looking at the revenue, it
up to 9.5%
is broadly in line, and PAT is a bit higher than what we are estimating. I don't have the guidance number.
Yeah,
if you could share
I'll give you, Sanjeev, 7.5 to 9.5 CC FY20.
So it's a bit lower than what the street was expecting, 8 to 10%. So given that the kind of deal wins Infosys had, so 7.5 to 9.5 seems a bit conservative, I believe.
Right, but 0.5%, does it really lead to a lot of EPS cuts here and there, or it will not matter over a period of 4 quarters?
No, not really. The EPS cut will not come because most of the street is still building at a high single-digit growth for FY20. But if you see, last year they have started with 6 to 8% guidance, and they have increased their guidance going forward. So there is a possibility that this year also they are starting will come in. So there is a possibility. So I don't see a big any change in the estimate for Infi because of this guidance.
Right. What do you make of the margin number? It's sub 22%. Is that something which is in the lower end, or it's in the guided range, but it's towards the lower end of the guided range?
No, we are building 22% for this quarter only, so it's meet our expectations, as well as I believe Street is also building 22% kind of EBIT margin this quarter. So there is no negative or positive surprise on this front.
Right.
So, but I need to check on what kind of margin guidance they are going to give for FY20.
Right. FY20 also they have given 21 to 23 is the number. That's the range that they have given.
So it is lower than what we are anticipating. Our was 22 to 23, so a bit lower than, because it's given that they are facing some headwinds in the headcount constraint and visa costs. So I believe that they are factoring in that kind of cost in their margins going forward. So it's a bit negative read through for Infi for 21% guidance for FY20. Lower end, it's a bit negative read through.
Right. Trip Chowdhry is also with us. Of course, we took the first reaction from him. Trip, the management will start speaking in the next 15 minutes or so. What would you want to hear? What do you think, what will the street wait and watch for once the management starts to speak?
I think it's very important to understand, and what we are seeing is the Infosys getting its rhythm back, because what they are doing is that they're increasing their capabilities in machine learning, deep learning, IoT, and every new technology that is coming and new engagements that are coming, including cloud. Infosys today is a very solid position than before. They have reskilled the employees for the opportunities that come. So I think the question to ask is, would that retraining of the employees continue? Number two, would they focus aggressively in these very high margin businesses like machine learning, deep learning, and other implementations and cloud? And third is, what are they going to do more to make sure they get each and every employee reskilled into the new opportunities? I think the margin pressure that somebody is saying, that is irrelevant. I think right now Infosys should have a one and only one focus: grab the land, get as many opportunities as they can, and then what they used to talk about.
Right.
Once you land the deal, then you can start delivering your services from India. I think this is very solid execution on the part of Infosys.
Right. Just request you to hang on, guys. Pranay is also with us. Pranay, what's your first analysis? Can you tell us what the street would focus on Monday morning?
Well, yes, Pankaj, when it comes to growth, it has come on expected lines. Revenue of 3060 million is marginally above the street consensus estimates. So no disappointment over there. In fact, even the PAT is maybe 1% higher. So no miss on growth and profitability. There is a miss on the margins though. Margins at 21.4% are lower than our expectation of 22.2. So clearly there is at least 140 basis point or 120 basis point net decline that we have seen in the margins, much more than anticipated. While in the Q3 con call, management had indicated that Q4 margins will be soft because of wage intervention steps that they are taking to stem attrition and also to accelerate promotion. But because of the rupee appreciation of 1.5% that we've seen and the continued investments on the sales, digital and capability building, clearly the impact on margins has been much more than anticipated. It will be interesting to see whether TCS, for which we are factoring in just a 10-15 basis point dip, is it more than this, because the Infosys has disappointed on the margins front. As you were talking, for FY20, the growth guidance is 7.5 to 9.5% for revenue. So that is no material increase from the current year's performance. It is flattish, no positive surprise for the FY20 guidance. Margins also, they have lowered the guided band by 100 bips to 21-23% from the earlier 22-24%. So clearly some structural headwinds which are being seen on the operational front, and also in an environment where rupee has retreated a bit, they believe that it's best to be a little conservative and guide lower, which is more achievable than guide higher and find it very difficult to match. So when it comes to basic numbers, there seems to be just an okay kind of voting, but when it comes to the guidance, perhaps you would say it's as per expected lines, but on the softer side.
Right, Pranay. Thanks so much for that, Pranay. Of course, we're also joining us from TCS. TCS can also declare numbers anytime soon now. Sudip, what is the point that you make out of what Pranay was saying about the conservative nature of the guidance, and probably that's the reason why that 0.5% lower than the street is the revenue number that the company has given?
Well, I think Infosys always have maintained that. They always try to give a conservative guidance and go and deliver towards the higher end of the guidance. That's been the history of Infosys, during when the promoters were running the company, and even now, in between Mr. Sikka's time, it was slightly different. But I think now it's pretty much fallen in that same pattern when the promoters were running. But leave that aside, I think the reality is Infosys is going for grabbing new accounts, and they're competing, and while competing they are definitely compromising on the margins to an extent. And yes, there is wage hike, yes there are upskilling expenses, but I suspect that the margin compromise is happening while gaining these new accounts, and that's pretty much getting reflected in the margin compression. I think it's a conscious strategy, and the market has to understand that they had fallen back quite a bit. They were not getting new accounts, and I think they are trying to regain the lost ground. So as a strategy, it is I think appropriate for the company at this stage of their life cycle. But having said that, this will lead to erosion of margin, and their margins are the gap between their margin and the leader TCS's margin is widening, and that's probably will lead to valuation gap in the market as well.
Right, Sanjeev, now that you've had a look at detailed numbers as well, how would you look at these numbers so far, the data that is out so far? Of course, a lot of deal wins, various other details are still expected, but what would you make of the numbers so far? Would you call it an inline number with a slightly lower than anticipated margins, or would you call it the conservative nature because of which the margins and the revenue guidance is looking soft?
I would read this number as a on the softer side, and the margins guidance is definitely a disappointment. However, State was backing it that management might give a lower guidance this quarter, but 100 basis points lower than what we are anticipating was not expected. So I believe this is on the softer side, and stock could react negatively in trade. But having said that, I believe Infosys still trading at a big discount to TCS. So I don't see any major correction happening in Infosys. So I still put my bet on Infosys going forward.
Right, there you can see the management, the top management walking towards the press conference room, or they are just coming out of the board meet. So in the next few minutes, we should hear from the management. These are first and live shots that are coming in. There you can see the entire top management over there. There you go. They are just walking in towards the press room, and they will be briefing in in just a bit. Trip, just a last word. What would you talk about Infosys valuation and Infosys valuation versus TCS?
See, I don't know much about TCS, but I can tell you Infosys has a lot of opportunity ahead, because remember a few things. when the industry goes through the transformation, and then when there's a global uncertainty in the economy, the customer is always looking for two things: the best skills, specialized skills at the lowest price. And Infosys fits that bill. I think that for a change, Infosys is going to have a lot of tailwind, which will help the business for the next 2 to 3 years. I think any weakness in the stock should be in buying opportunity, because today's Infosys is much different than Infosys was 2-3 quarters back. It is a time to load up on Infosys stock. The business is only going to improve, not deteriorate.
Right. Sanjeev, do you agree with Trip? The business from here on should improve?
Yeah, but no doubt about it that the growth trajectory will improve on the top line front. But my worry point is more on the margins front, at what cost the revenue is coming in. So I need more clarity on at what cost the new revenue is coming in. So that is the worry point. Apart from that, I believe that valuation wise, I still find comfort in Infi, and there is no growth worry as such on the top line front. But margin front, there's still some worry.
Right. Sudip, the management will just about start to speak. I think we've spoken to everyone what to hear, and we've not taken your views. What to hear when the management will speak?
Well, I think a couple of things to my mind will be very important. BFSI commentary is definitely important. I'll be very carefully hearing what they talk about BFSI. I will also be careful about the manpower additions and the utilization. Last few quarters we have seen a significant addition of manpower as far as Indian IT is concerned. It shows some confidence which the IT industry is getting back. So let's see what kind of confidence and what kind of hiring Infosys has done. That's important. Also, I think overall their confidence and body language about the next year and the guidance which they have given out will be watched very, very carefully.
Right. Trip, you were talking about Infosys being different 3 quarters from now, and now they have changed. Can you just explain that in detail? What do you mean when you say that? The management focus, the sort of growth that they are looking at, the sort of deals that they are getting, what are you trying to say?
Definitely, like in Silicon Valley where I am, there is Amazon AWS, Google Cloud, Microsoft Azure, then a lot of effort on machine learning, deep learning, autonomous computing, automation of computing systems. These all, first we would never see Infosys being a participant in these conferences. Today we are seeing Infosys employees being present. We see Infosys having their own exhibitor booth. And when we interact with those employees and these conferences, I can assure you these people are having a complete pulse on the technology, the opportunity, and the customers. This has never happened before. If you look at the regime when Sika was the CEO, the company was completely like a lost cow. They had no direction, no vision, total confusion. That's not the case today. Infosys has a complete pulse on what needs to be done. As a matter of fact, Infosys should hire more people, retrain the existing employees, and go full-fledged. And they should also, in my opinion, stop doing share buybacks. They should invest in the employees, make sure once the global economy recovers, Infosys recovers disproportionately on the positive side. I think the tailwinds are very, very solid for Infosys. They have got their act together. That is very important.
Right. When we get the numbers of TCS, the comparison will start Infosys versus TCS. What is the sector leader? But Trip, the point that you're making is that irrespective of that, essentially the growth numbers would be decent, and that's why one should look to buy Infosys if it falls.
I think it should be. I also see TCS also in these conferences. I would not rule out TCS, but I don't know much about their details on the financial aspects. But I can tell you, the Indian IT services, at least the bigger ones, are getting the act together. They are doing things which are in the right direction, hiring more local talent. That means the margins would come under pressure. That's by design. But that is a positive margin depression. Why? Because of that, they can get into bigger, larger deals. Then over a period of time, say 12 months, 18 months, then you will see some margin expansion. So I don't think investors should look at Infosys as a training opportunity. They should look at Infosys as an investment opportunity over the next 2 to 3 years. And I think the past 5 years has been totally disastrous for Infosys. I think the next 5 years for Infosys would be really golden times.
Shots out of the boardroom that you can see on your screen, the top management walking in after the results, and just in the next few minutes they would be start to speak. Also, we have our reporters team over there, so the questions that they ask will also be something that we'll cut across live too. It's an important management. Always, the commentary between TCS and Infosys both is quite common. So they've gone in the room, and you can see the camera person is also just panning out his camera to go in that room. Sudip, just a word in terms of deal wins. Probably it will be the first time that they'll give a color on the FY20 number. So we have the quantitative number, but quality-wise, what to watch out for in this 9% growth that they are pegging in?
Well, I think as I was mentioning, we have to see their commentary on the BFSI. It's a very, very large segment for the IT companies and Infosys as well. Also, we'll have to see, the kind of size of these deal wins. And how many, as they classify in different buckets, the client sizes, what kind of buckets and which buckets they have won the larger clients. We'll have to see that. And I completely agree, and I have been mentioning the same point, that margin compromise is happening for the sake of acquiring more and more clients, larger clients, and that's a good thing to happen for Infosys. Also, I will like to hear from them how much of their business is in the newer segments. As we know, TCS has done a commendable job on the digital front, and TCS has about 30% revenue is coming from digital. We'll have to see what are the comparable numbers as far as Infosys is concerned, and what are the comparable numbers in the newer and emerging segments. That's going to be very, very important. Yes, the traditional business still brings the bread and butter, but we need to understand what are the newer segments, the emerging segments, and how Infosys is faring in those segments as far as deal wins are concerned.
As far as deal wins are concerned, Sanjeev, this is the point that you were making out as well. The deal wins momentum should continue for growth.
Yeah, deal wins this quarter, if you see the strong uptake, last quarter it was, I think, 1.57 billion. This quarter they have won around 2.1. It is, I think, 30% Q-on-Q growth. And for the entire year, it is 6.28, if I'm not wrong. So definitely the strong deal momentum is there for Infi. So it's a positive, definitely the positive read through for Infi on the deal wins part. But let's hear from the management what their call on the margin going forward, because that is the only asking point for Infi now.
Right, and Sanjeev, margins over the period of time for Infosys have continuously fallen down. I mean, it's not something which is new. Do you think markets were already factoring in between 21 to 23, or markets were slightly higher because of higher execution?
If you see last quarter, the subcontracting cost has went up 170 bips Y-on-Y to 7.6%. So every quarter it was going up and up. So need to see that how far it is going to do and what is the normal margin that's going to there in going forward in the next 2 years. So if the incremental revenue is coming at a higher cost, then definitely there will be a P-de-rating that is going to happen in fee. But having said that, we need more clarity, because it is a transient issue because of the visa constraint or the talent constraint that will go away going forward. But it is going to be a structural issue, then definitely it's a big worry. That's why I need to more clarity from the management how they see going forward the subcontracting expenses and visa cost and this talent constraint going forward. So this kind of clarity need to be there for the stock to re-rate from here. Otherwise, I don't see that big de-rating will happen from this level, because trade is already factoring the lower kind of margin for Infi.
Right. We also have quotes coming in from the MD and CEO, and I would just like to read that out before, of course, I'm sure they'll talk about that in the press conference where you can see. And Salil Parekh, CEO and MD, says that we have completed the first year of our transformation journey with strong results on multiple dimensions, including revenue growth, performance of our digital portfolio, large deal wins and client matrix. This is a reflection of our increased relevance stemming from our focus on digital positioning and long-standing client relationship. He also says our planned investments have started to yield off, and as we look ahead into the fiscal 2020, we plan to deploy various measures of operational efficiency across business. Sudip, as they are saying that they will look at various measures of operational efficiencies across business, what are you looking out for? Do you think that they will go for all-out cost cutting, or they will stop bidding or start bidding, projects where margins are only higher?
Well, I think the first one is more likely. I'm not sure whether it will be all-out cost cutting or strategic cost cutting. I think the world is changing as far as the IT services and the IT kind of availing of IT. So people are becoming extremely cost conscious. I'm talking about the US and European markets. So they have to necessarily compete on the cost. So maintaining a very high margin unless they have a completely differentiated product may not be possible. And you don't get these differentiated products on a regular basis.